Hi everyone. Today is Monday, April the 28th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. I am back from holiday, and we are taking a look at the ES. Now, we will be coming into a month-end close, and so we are going to see probably a little bit more volatility, but statistically speaking, April is one of the most positive end of the month performance spaces that we normally find in the chart. I have some things posted so you can see what's actually happening. This is the opening range. Remember, in the opening range, if you go long, it's always best to go long at the dips in this kind of environment, and that is because we are sitting underneath the 200 simple moving average and underneath the 50 simple moving average on the daily. And so that sort of thing tells us that if we are going long, dip buying is the better way to do it. So on the tight time frames, we got an upward 50, a sideways 14, and we really are sitting inside of Friday's range, right? And so what this tells me is we've got a little bit of coiling. Take a look. Momentum, that's this. You can see it compressing, right? It's not on the outside edges anymore. It's compressing. That gives us a little bit of sideways action potentially. And dips are buy zones. The range is pretty big, actually. It's about, in the ES, it's about, it's not that big, but it is about 20 points wide. And so that's something very, very interesting for us to keep an eye on. We can see that the low end of the opening range has brought buyers back to the edge. We can see that the opening range of Friday's candlestick, and that is Thursday at 6 p.m. Eastern, that created the floor, okay? And so dips are buys. I am concerned about resistance areas in the current formation, but we are moving in a fairly aggressive clip to the upside. Let's take a look at the NQ. Same sort of thing. We pay attention to the fact that we are under the 50 simple moving average. We're above the 14 on the day, so we've got this sort of tightening compression mode. If we go to the 1 hour formation, we can see that our range is 60, 70 points wide, something between there. We notice that breaking out of the range did not hold. We've got an upward 50, an upward to flat 14, same compression in the momentum that gives us coiling, but trend is still telling us that dips are buys and short action trades are counter trend. So you want to take those for a shorter period of time than you would a long target. So what are the long targets? I've got them marked up here in a stair-step motion. We could top out here, but the measured move has us at 19,701. Notice what I've got added here also is a 2-day move. I also have that in the ES, that 2-day move. Right, it's telling us if we expand volatility, those are the upper edges of the range. But I really don't see that today. I just wanted to mark it in the event we get news that tells us something to the contrary. For the low of Friday's candlestick formation, I moved it down a hair, we can see that we haven't touched it. So that's pretty bullish momentum here in the Qs. On top of that, the high of Friday's we've lost. We lost it as soon as we recaptured it. A great big move to the top of today's opening range, but then a pullback. So tells me that dips are the buy zones to watch for sure. And if we lose 19,428, probably a fair chance that we dip into the lower target at about 19,351. Let's take a look at the YM. These guys have 30-day formations, and so we're going to see the measured moves much wider than they normally sit. I'm only going to adjust these a few days at a time, But what we can clearly see is that this compression is almost done, and it occurs to me that dips are certainly likely to be buy zones. That's the bottom of the opening range for the long. It's also the opening range for a short that's got real momentum on it. We're not really seeing that with these sort of sideways formations. Compression, still the order of the day, but holding that 50 really well from the hourly formation. If we see any kind of dip, should be a buy zone today, so I would be watching for that. If we take a look at the 4 hour, we can see that I do believe that this is a dip event, but the 50 is fairly flat. That's the one fly in the ointment that I'm looking at. I did choose the 4 hour candlestick range. That's this widest edge that the last 20 hours almost have been sitting in this space. So the breakout could easily be a buy zone in this space, but I don't like doing that. I prefer the dip to buy. Let's take a look at Bitcoin. Man, is this one just running like mad? Compression. I'm seeing a lot of compression in the volatility chains here. Seem to be moving in a wait state. Take a look at this hourly formation. The opening range is over 1,000 points wide. To me, that's fairly high risk. Here's the top of the implied volatility move. I would not be opposed to shorting up here at this long target, but I would wait for it to give me some kind of rejection event. I want to see it lose that high and then rotate down, at which point we'll be looking for support in the near term across these edges. This is a very dramatic move in the early part of the morning. Not sure what's going on, but to move 3,000 points in the pre-market action that's pretty significant. No signals that we have a rotation yet. So, at the end of the day, dips are buys for Bitcoin. Let's take a look at oil. We had a lot of things happen in the oil markets over the weekend. Well, not the oil market specifically, but a lot of Iran stuff. I don't know if that's going to be something kind of yucky. We'll see. Yucky being a technical term. But this range is extremely wide. Again, pretty dangerous. But notice the implied volatility for this move is right up here where we rejected at 63.46. What does this tell us? Well, not much. And that's because we're sitting in this very big, wide range. We could have either edge, either a break up into the volatility measured move again, and then a rejection, or we could hold this edge and move sideways. And that's because that's really what we've got with the moving averages, right? Momentum is drifting, but that's just telling us it's drifting into support. And we can see support holding at these lower edges. And let's put a lower edge in here at 52.56. Oops. Right, that's what I'm looking at right there, and that is very, very interesting. The 2-day move is, of course, pretty wide. I don't see it on the downside there, but you don't know. You really don't know. I do believe the administration wants oil to continue to move down. We'll see what happens here in general. Let's take a look at gold. I believe gold is in rotation down. Let's look at it from the top. Look at this big move over the last several days. That's really quite a clip down from 3,500. It's a $200 move, but it's been very sideways since then. So what are we staring down? Well, here's the trend. A little bit downward to flat. So either a break to the north is going to give us more upside, or a break to the south is going to give us more downside. I do not know why it did not mark the move for a 2-day event. So let me get that very quickly. 2-day event, waiting for the option chains to come out. That's $50 from the current price, so that's $32.50. $32.52. All right, and so that's the implied vol move, 2-day. All right, so this tells us the expansion for folks who maybe are holding the chart a little bit longer. Trend is down, momentum is mixed, compressing. Tells us that that's really all we need to know from that perspective. You can see it very sideways in this rotation. Could this be an ugly head and shoulders pattern? Yes, but a lot of people don't like necklines that are trending negative like this. My thought is that we do easily come back into the 3200 area, and ultimately I would not be surprised to see us in these old implied vol moves down at 3000 and then 2950 to 2930. Let's take a look at SPY. I have SPY on an opening range for a 4-hour formation, right? And what it tells us is that we are just at the top of yesterday's 4-hour move. That tells us, it's fairly bullish, right? You can see it making higher lows, little bit of a higher high, so the sharper dips will be those buy zones in my mind, right? And maybe not, it doesn't even need to be a sharper dip. It could be something like 546. If we go to the hourly chart and we break it down from that perspective and we think about an intraday trade, it is very bullish. Dips or buys, filling the gap is very likely. So that's 551. If you wanted to do something, I do not believe that we are in a range expansion formation on the day. So I think we move to the top and then move back into the moving average. That's my gut from that perspective, but I really am getting back into the swing. Not going to take any active trades today. Just want to make sure I'm reading the market well. And so that's going to be the order of the day for me. Notice the Qs filling the gap, right? And so we should see a few sellers here. Not particularly sure if we're going to see a lot of sellers here, but definitely a few sellers right there. Measured moves, they really are fairly big, right? 5 and 9 points for the couple of days ahead. So we'll see. We've got a lot of the Mag 7 reporting this week. So I think volatility is really something that we can bank on here if we look at things maybe far away. If you've got the opportunity to maybe do some back ratios way up at the top of these ranges or way at the bottom, we might have something pretty interesting. All right. Hey, listen, that's it for me. We will have the midday Moneyball report. Super excited to be back connected with everyone, and I look forward to making it a great trading day. Watch your risk, folks. We're still headline driven, and yeah. Okay, take it easy.